Imagine turning $100 into $1,000 in less than an hour. Now imagine losing that same money even faster. Welcome to the dangerous world of options trading, one of the most explosive trends in modern financial markets. Every single trading day, thousands of traders jump into contracts that expire in just each hours. Some walk away with life-changing gains. Others, they completely blow up their accounts before lunch. And the craziest part, most beginners entering 0DTE have absolutely no idea what they are actually trading. This is not normal investing. This is not long-term wealth building. This is financial warfare at maximum speed. Today, we are breaking down what ODT options actually are, why traders are obsessed with them, how people make insane profits, why most traders lose money, the hidden risks nobody talks about, and whether 0DTE trading is opportunity or financial suicide. By the end of this video, you will understand why Wall Street is terrified, excited, and addicted to 0DTE options. And trust me, some of what you are about to hear may completely change how you look at the stock market forever. Section 1. WTDLA 0DTE mean. 0DTE stands for 0 days to expiration. These are option contracts that expire the SAMECDGA are traded. Not next week. Not next month. Not even tomorrow. Traded. If the market closes at 4 p.m., your contract dies at 4 p.m. And once expiration hits, your option becomes worthless instantly if it finishes out of the money. Now, to understand why this matters, we first need to understand what options are. Options are contracts that give traders the right, but not the obligation, to buy or sell an asset at a certain price before expiration. There are two main types: call options, betting price goes up; put options, betting price goes down. Normally, options can expire weeks or months later. But ODT contracts are different. They are hyper short-term bets. They are designed for speed. And because time is running out extremely fast, the price movement becomes insanely aggressive. Stock moving just $1 can cause a 0DTE contract to jump 50%, 100%, 300%, sometimes even more. That is why traders love them. Same small moves can create massive gains. But here is the problem. The exact same thing works against you. If price moves the wrong direction or even stalls for too long, your contract can collapse in value within minutes. This is because of something called theta decay. Theta is the rate at which options lose value over time, and with 0DTE, time decay becomes brutal. Every minute matters. You are literally fighting the clock, and the closer the market gets to closing, the faster your option can evaporate. That is why 0DTE trading is often compared to gambling, scalping, or financial day trading on steroids. But despite the risks, 0DTE volume has exploded across the market. Why? Because traders are chasing one thing: fast money. Section 2. Why 0DTE became so popular. A few years ago, most retail traders barely knew what 0DTE was. Today, it has become one of the hottest trading trends on earth. And there are several reasons why. First, low capital requirements. With stocks, buying 100 shares of an expensive company can cost thousands of dollars. But with 0DTE options, you can control large positions with much smaller amounts of money. A contract worth $50 can suddenly become worth $300 in minutes if the market moves hard enough. For many beginners, this feels incredibly attractive, especially in a world where people want quick results. Second, social media hype. TikTok, YouTube, Discord groups, Twitter. Everywhere you look, traders are posting screenshots of insane gains. Turned to $100 into $5,000. 500% gain in 20 minutes. Quit my job trading SPY options. But what most people DOL post are the losses, the blown accounts, the emotional breakdowns, the weeks of losing trades behind one lucky win. Social media often shows only the highlights, not the destruction. Third, daily expirations became more common. Indexes like SPY and QQQ now offer options expiring almost every trading day. that dramatically increased ODTE activity. Before, traders had fewer expiration choices. Now, there is a new battlefield every morning. And finally, market volatility. Modern markets move fast. Economic news. Federal Reserve announcements. Inflation reports. Earnings. Geopolitical tensions. One headline can move the market violently within minutes. And 0DTE, traders try to exploit those moves, especially during events like CPI reports, FOMC meetings, jobs reports, major tech earnings. Because during high volatility, 0DTE premiums can absolutely explode. But there is another reason this market became so dangerous. Accessibility. Almost anyone with a smartphone can now trade leveraged derivatives instantly, have no finance degree required, no professional training, just an app and a dream, which sounds exciting until reality hits. Section 3. How people make huge money. What will validates or DT? Now let us talk about the part that attracts everyone, the profit potential. Because yes, people really do make huge money tradings of DTE. Sometimes absurd amounts. Here is why. 0DTE contracts are extremely sensitive to price movement. This sensitivity is measured by something called gamma. As expiration approaches, gamma increases dramatically, meaning small market moves can create massive changes in option prices. For example, a trader buys a SPY call option for $100. Then the market rallies aggressively. Suddenly, that same contract becomes worth $200, $400, maybe even $1,000, all within a single trading session. This creates the possibility of massive percentage returns. And traders love percentage returns, especially small account traders trying to grow capital quickly. Some traders specifically target opening momentum breakout moves, economic announcements, power hour volatility, trend reversals. Others scalp for tiny quick moves repeatedly throughout the day. Professional traders may use sophisticated systems involving order flow support and resistance, volatility analysis, market internals, liquidity zones. But beginners often do something much simpler. They gamble on direction, and sometimes they get lucky. That luck can become extremely addictive, because nothing feels more powerful than seeing a trade double in minutes. Your brain starts thinking, what if I just size bigger next time? And that is where many traders enter dangerous territory, because 0DTE can create the illusion of skill. A beginner might win huge during a strong trending market and believe they have mastered trading, but eventually, the market changes. And then reality arrives. If you are learning something valuable so far, make sure to hit that like button and subscribe. This channel breaks down trading, investing, financial psychology, and market strategies in simple language without the fake guru nonsense. And if you have ever traded options before, comment below. What was your biggest win or biggest loss? Section 4. The dark side of ODT trading. Now we get to the part most influencers avoid talking about, the losses. Because while 0DTE offers massive upside, it also carries devastating risk. In fact, most traders lose money, and there are several reasons why. First, time decay is relentless. Remember theta decay? With 0DTE, the clock becomes your enemy. Even if your market direction is correct, you can still lose money if price does not move fast enough. That shocks many beginners. They think, I predicted the market correctly. Why am I red? Because timing matters just as much as direction. Second, emotional trading. 0DT creates intense psychological pressure. Your position can swing plus 80%, minus 50%, plus 120%, minus 90% within minutes. That kind of volatility destroys emotional discipline. People panic. They revenge trade. They average down. They overtrade. And many traders become addicted to the adrenaline itself. At that point, they are no longer trading rationally. They are chasing dopamine. Third, position sizing disasters. This is where accounts die. A trader turns $100 into $1,000. And they think, if I use my whole account next time, I could make even more. One bad trade later, everything is gone. The market punishes greed brutally, especially in leveraged products. Fourth, false confidence. Few lucky wins can trick traders into believing they have found easy money, but short-term markets are extremely noisy. Even professionals struggle with consistency. And finally, liquidity traps and market makers. Many beginners believe the market is simple. It goes up, I make money. Reality is far more complex. 0DTE markets involve hedging activity, ad-gamma exposure volatility, pricing institutional positioning, liquidity hunting. Sometimes the market moves violently in both directions just to destroy option buyers on both sides. This is why many traders experience getting stopped out before reversal, buying tops, panic selling, bottoms, emotional whipsaws. And because contracts expire the SAMDAY, there is very little room for error. One stake can wipe out multiple winning trades instantly. Session 5. The Psychology of EDECHN. There is something deeper happening with 0DTE trading that many people do not realize. It is not just financial, it is psychological. EDECHN trading can become addictive in the same way gambling becomes addictive. Why? Because of intermittent rewards. Sometimes you lose, sometimes you win huge. That unpredictable reward system strongly affects the brain. Casinos use the exact same principle. Slot machines do not pay every time, but occasionally they deliver a big reward, and that uncertainty keeps people coming back. ODTE trading can create the same cycle. A trader loses repeatedly, then suddenly hits a massive winner. That one win emotionally erases previous pain. And the trader thinks, I am just one trade away from making it all back. This becomes extremely dangerous, especially for people under financial stress, chasing quick wealth, trying to escape debt, seeking emotional excitement. Some traders start checking charts obsessively. They cannot sleep. They cannot focus at work. Their emotions become tied to market movement. Green days create euphoria. Red days create depression. And eventually, trading controls them, not the other way around. This is why professional traders emphasize risk management far more than profits. Because survival matters first. Without risk management, eventually the market removes you from the game entirely. Section 6. How professionals approach ODTE differently. Now here is something important. Professional traders do trade 0DTE, but usually very differently from beginners. Professionals typically focus on probabilities, risk control, statistics, execution discipline, position sizing, not emotional excitement. Many professionals risk only a tiny percentage of their account per trade. Some risk less than 1%. Why? Because they know losing streaks are inevitable. They also often have strict rules like maximum daily loss, maximum number of trades, stop-loss levels, no revenge trading, no emotional averaging down. Many retail traders ignore all of this. Instead, they focus only on potential profits. But professionals understand something crucial. Consistent survival is more important than occasional massive wins. Another difference: professionals often specialize. They may trade only opening range breakouts, specific economic events, trend continuation setups, volatility, crush setups, mean reversion plays. They wait patiently for high probability opportunities. Meanwhile, beginners often trade constantly out of boredom, and boredom trading usually becomes expensive. Professionals also understand market conditions. Some days are ideal for ODTE, others are complete chaos. Experienced traders know when NEOT to trade. That skill alone can save enormous amounts of money. And perhaps most importantly, professionals detach emotionally from outcomes. One trade means nothing, because they think in terms of hundreds of trades over time. Beginners often think emotionally, trade by trade, and that emotional inconsistency destroys decision-making. Section 7. Can you actually make a living trading 0DTE? This is probably the question many people secretly want answered. Can you actually make a living trading ODTA? Technically, yes. Realistically, it is extremely difficult. Social media creates the illusion that full-time trading is easy. Wake up, take one trade, make thousands. Relax on a beach, but real trading is far less glamorous. Professional trading requires discipline, emotional control, strategy, testing, consistency, risk management, psychological resilience. And even skilled traders experience drawdowns. There are months where nothing works well. There are market environments that completely change. There are emotional pressures most people underestimate. Now combine all of that with one of the highest risk trading instruments available, and you understand why most people fail. Many successful traders actually prefer slower strategies. Why? Because slower strategies reduce emotional noise. ODTA is incredibly fast, and speed amplifies mistakes. That does not mean nobody succeeds. Some traders genuinely thrive in fast environments, but the people who survive long-term usually treat trading like a business, not a casino. They journal trades, review mistakes, track statistics, manage risk obsessively, and they understand a hard truth. Protecting capital is everything. Because without capital, you cannot continue trading. Section 8. Biggest beginner mistakes in ODTA. Let us go over the biggest mistakes beginners make in ODT trading. Mistake number 1. Trading without understanding options mechanics. Many beginners do not understand theta gamma implied volatility delta premium pricing. That is like driving a race car without understanding brakes. Mistake number 2. Using too much size. This is probably the account killer. Large position sizes create emotional instability. Once emotions take over, logic disappears. Mistake number 3. Holding losers too long. Because ODTA moves fast, small losses can become catastrophic quickly. Mistake number 4. Revenge trading. One bad trade leads to another impulsive trade, then another, then another. Suddenly, an entire account disappears in a single day. Mistake number 5. Trading random market noise. Not every candle matters. Not every move is tradable. Many beginners force trades out of impatience. And finally, ignoring risk management entirely. Risk management sounds boring, but it is the reason professionals survive. Anyone can get lucky temporarily. Long-term consistency is the real challenge. So, is ODTA trading worth it? The answer depends on the person. For experienced traders with discipline, strategy, and risk control, ODTA can be a powerful tool. For undisciplined beginners chasing fast money, it can become financially destructive. The biggest danger of ODTA is not just losing money. It is developing unrealistic expectations about wealth, because real long-term wealth is usually built slowly through investing, consistency, skill development, patience. Discipline. ODTA represents the opposite extreme. High speed, high emotion, high risk, high reward. And while the internet glorifies the winners, many silent losers disappear quietly. That is the part social media rarely shows. At the end of the day, the market does not care about emotions. It does not care about hope. It does not care about desperation. It rewards discipline and punishes recklessness. So if you ever decide to enter the world of ODTA trading, understand exactly what you are stepping into. Because this is not just another financial trend. It is one of the most aggressive trading environments modern markets have ever created. If you enjoyed this deep dive into ODTA trading, make sure to like, subscribe, and turn on notifications for more videos about trading, investing, financial psychology, and market strategies. And tell me in the comments, do you think ODTA trading is opportunity or just legalized gambling? Stay smart, manage risk. And I will see you in the next video.